Yeah.
See here. All right.
Yeah, we can see it fine.
Great. And yeah, feel free to interrupt me, guys, at any time, ask questions, because this is more of a conversation than like me presenting something. So, don't be afraid to jump in, and we'll just go, talk through it. So, President of Break a Day Capital. I've been a lifelong entrepreneur. I shovel driveways, and we detailed cars growing up. I co-produced 3 independent films in my 20s. I owned a outdoor ed leadership development and after school program in Los Angeles. We were serving 9,000 kids daily. And I sold that at the end of 2016 and got into real estate full-time at that point. I had been investing a little bit, but I wanted to learn everything that I could, and by selling that business, I was able to spend time and educating myself as much as possible. And like Oleg was saying, it starts slow, and then it really does pick up steam pretty quickly the more time you spend on it. So I've invested in over 1,900 units, and I've got $65 million assets under management right now. We just I closed 2 deals last week, actually. One, I do some high-end flips locally, and then the other property is a deal just outside of the city of Phoenix. So it's in Phoenix Metro. It was garden office space, and we're converting that to multifamily. So, it's basically a shell that will create 40 units. And then we'll tear down the front building and add another 30 units in the front, another 34 units in the back. So when we're done, we'll have a little over 100 units, and 100 units is a good number to when you're going to sell it eventually. You want to be over 100, preferably if you can. And there's just the numbers in Phoenix are just crazy as far as investing. We're selling a deal right now that we've had for under 2 years. It'll be 2x to our investors. So I'm excited to find something really affordable that we can convert and do basically a cap rate arbitrage. I'm also the co-founder of the Asset Management Summit, the host of the Real Estate Asset Management podcast, and the best-selling book Best in Class. Here's what it looks like. It's on Amazon. If you want to get it, it goes through the whole journey of asset management, from due diligence to renovation to legal, taxes, all the way through disposition. And that's a picture of our podcast. It's been going on about a year and a half, I'd say. And we've had they're short. It's not one of those hour-long podcasts. We focus on one aspect of asset management, and then we just, it's like 10 minutes, 6 questions, boom, we're in, we're out real quick. But, there's, chock full of good information in there. All right, so let's get started. Asset management tips and tricks. So none of this is brain surgery. These are almost common sense things, but I think, particularly when you're starting out with something, you don't know where to start. And it all happens at just being proactive versus reactive. So one of the things we like to do is typically we'll rebrand the property, and we don't wait till we take over the property, because it could take, a month or a couple of weeks to come up with some names. And then you've got to come up with the image, and then you got to get permits. So that could take a few months. Once we know we're moving forward with a deal, we're moving forward on permits and making sure every vendor is vetted out, and moving forward on the name change and all these things. We're always looking to compress timelines. And if we can compress timelines on all these different things, we are getting to our business execution so much faster. So a simple thing as renovations, to a unit. So if we know a unit is going to be vacant in 2 weeks, we'll know So make sure we have all the appliances ahead of time, particularly now during these days, appliances could take forever. So we might order a bunch at a time, but we always know what the lead time is and give ourselves a buffer. So it's there ready to go. We also know when we need to notify the renovation team. Is it we need to notify them 1 week before, 2 weeks before, 3 weeks before, so that once that person, as soon as they're moving out, they're ready to go. And they have everything they need. So if we could take a week off of that timeline and multiply it by 50 units, 20, whatever, how many units, and we're getting at least up 1 week early, that adds up to a lot of money over time. So like I said, we're always looking to be compressing timelines. All right, and it's really important is to celebrate wins. Your property management team, it's a thankless job. Low margins. Typically, they only hear about complaints, particularly from the residents. So make sure that once you set up expectations and they're meeting your expectations, that you're celebrating those wins. We did a fun thing. I knew our property manager was a Chiefs fan, and my partner on the property was a Raiders fan. So we're teasing her. If she got to 100% pre-leased, I'd make my partner wear a Chiefs shirt. And we had some good banner every week, and this was going on for a few weeks. And when she hit it, and we went to the property to visit it, she had a Chiefs shirt ready to go, and we took a picture of it and put it online. And her smile was ear to ear. Like no amount of money would get that smile from her. She was just so excited about it. It was just a unique thing that it didn't cost us anything, although we did give her a couple $100 gift certificate. But she was thrilled, and my business partner got roasted, which is great. And so we just made had fun with it, and that's really important because, like I said, as you move on to bigger properties, some of the tenants could be, if you're only dealing with a few, typically, maybe they're all fine, but as you get some tough people once you start getting into some bigger unit types. So really important, celebrate those wins. Tracking, really important. We track everything because things are forgotten all the time. So we'll use a Google Drive, and that's free. You could put everything up there. So when we get our weekly report from our property management team, it's on Google Drive, so everyone can see. And we have one of the tabs is task list, and so we put, what is the task, who is it assigned to, when is it complete, any other particulars, so that everyone can see. And if you're not finishing your task, that's embarrassing. So you always it pushes people to complete the task. And on Google Drive, everyone can see it at any time. Anyone can access it. So we like to use Google Drive for a lot of different things. We also use a Trello board, and that's what we use for our renovations. And it's really easy to use. I'm not technologically savvy, but even our GC can use it, and he can just move it, from one stage to the next to another. And there is a free version. So that's a good one that we like to use. Also, Monday.com, you can kind of do the same thing, and Monday.com has a few more things that we like to use. So that's another good program. We also have a CapEx tracker, and I'll show you an example of our CapEx tracker because it's really important to track your budget, because it could quickly go awry. You can spend a lot more money. So you want to track your budget versus your actual, how many units, whatever it is. And I'll show you in detail in just a second. And KPIs, really important. What gets measured gets managed. So if you're not tracking things, you're not going to see the improvement over time. You want to see your per square foot rent continually going up. You want to track what's bringing the most leads, and all this information just helps you make better decisions. Because if you're not looking at the data, how do you know what decision to make? And so like we break down everything. So Neil Bawa does this LACEL. It's called leads, appointments, showings, applications, and leases. And so it just breaks down the whole process all the way. And taking that philosophy to anything is really important. So if you know, if you've got 100 leads and only like 5 applications, like where's the problem, you know? So that helps you kind of dive in deeper to see where do you need to fix. And so we'll have that conversation with our property manager a lot, you know, to see, you know, to get our leases up when we're not leasing well. You know, we're not getting enough leads or we're not getting enough conversion. So we can constantly look at that data to improve our property. And like I said, you know, jump in anytime if you guys have questions.
Hey, Gary, I have a question about that.
Yeah.
So does the property manager give all this data to you? Or do you actually like have to track it yourself? Or do they give you raw data and then you compile it in a way that makes sense?
Yeah, great question. So we have access to the property management software. We can't like adjust anything, but we can get reports and whatnot. We also have a very detailed weekly report that we request, much more detailed than most other owners. And that we've refined over time. And once we trained them up, they're very willing to fill it out. I know it takes a little bit longer for them to fill it out, but it allows us to ask the right questions and to figure stuff out and save time as well. And the last thing we do, we use RealPage, and that connects to the property management software, and that builds out all of our KPIs. So it's pulling from the property management software and creating the KPIs in a very digestible form. So I think it was like a $5,000 setup, and then we pay $1 per unit per month, and it's well worth it for us. And I'll show you some examples too. All right, so this is our, you know, this is one tab off our monthly report. So, you know, let's say we have a property newsletter. What's involved in it, who's responsible, when is the target completion date, and when is the actual completion date. So we have all these different activities that everyone can see and is held accountable. And that's really important, because just because you hire a property management company, you still have to manage them. So this helps do that. All right, and so this is one of the pages of our CapEx tracker. So we have all the different projects that we have, description of the project, our timeline, is it ongoing, in progress, complete. Here's a budget, the actual and the difference, and we have different tabs too that feed into this, and I'll show you. All right, so we like to break it down per unit. So we have the unit type, then we have the unit number, and then we'll show what work was done and how much it is. So we're tracking it, and this is also really good information, all this tracking, so that when we're looking at other properties, we can compare, particularly in the same area, so we know how much did we spend, and what was needed to get the rent bumps that we got. So this breaks everything down. This is we have an interior rehab page. We have an exterior rehab page, and exterior is a little different because typically you're going to have a bunch of different invoices, and we can add more columns as well. But usually for the interiors, it's one cost for everything, and here it'll be a bunch of different invoices, and all this is feeding into that main page that you saw. And then here we have, yeah, it breaks it down some more. All right,
this is very
KPIs.
Yeah, I saw that you were calculating cost per square feet, and that's amazing because you can then use that data for other units, there's similar properties in the area. Yeah.
Exactly. Yeah. This is building that database of information when I'm going after other properties.
Right.
All right, so here is one of our KPIs, and there's no data before this because we just bought the property in December, so it doesn't have the prior year, but it's got our actual NOI and then our budgeted NOI. So obviously we're outperforming, which is great. And this, I wanted to show you this too, because it's a lagging indicator, not a leading indicator. And what I mean by lagging is this is the result of all the different work we're doing. This isn't driving the NOI. There's nothing on here that's driving that. So we want to also look at what's driving the results, which is going to be, our leases, marketing, stuff like that. All right. So when we look at vacancy, we're going to look at it, break it down completely, because here we only have vacant, not leased, only 6 units, which isn't bad. If I'm looking at it a whole, like, oh, we're doing great. But what I want to do is see, okay, which unit type isn't doing well. So I see this right here. I don't know if you can see my my cursor, but A2R1, there's only 4 units and 2 are vacant. So that's something I want to look at, and maybe the location isn't good, maybe the price is too high. But all these other units, I'm going to increase the price because we have 1 or 0 vacant. But here I have 2 or 4, so maybe I want to bring this price down just a little bit and increase the other one. So breaking it down by unit type is really helpful, particularly when you have so many units. All right, so traffic, where people are finding us. So Apartment Guide brings the most traffic by far, but we've only had 4 move-ins, so that's a 1.9% conversion, whereas Craigslist, we had 16 hits and only 4 move-ins, so it's just as many move-ins for just a fraction of that, and Craigslist is typically free, so much huger conversion ratio. So what I would tell my staff is, okay, well, let's double or triple down Craigslist. Let's keep putting more volume there because we've got 4 move-ins from there. So much better conversion. All right.
Can I ask you a question? Like,
yeah.
How do you even track this? Because how do you track that? Whether this, you have to like literally somebody is manually tracking that this email came from Craigslist, increase counter here, or is there a better way of doing it?
I think a lot of it is automated. There is some work on the property, on the leasing agent side of, they've got to, so it comes in, it'll say let's from Apartment Guide, and they'll move them along the process. So as long as they're keeping track of it consistently within on Yardi, that's the software they use. As long as they're inputting it, then all that information is there for us. So they don't have to do too much, but they just have to continue it along the process.
How about the quality of the tenants on those?
Sorry, what was that, Oli?
How about the quality of the tenants? Like
yeah, I mean, this doesn't really track the quality, but what it'll so maybe that's the part of the conversion ratio, the move-ins, because what'll happen is obviously we got to run a credit check and whatnot. So that's a good insight that maybe the quality of tenants from Apartment Guide is causing our only 4 move-ins. I don't have that answer. That is a really good question though, because would Apartment Guide be a lot less quality than Craigslist? I don't know. I don't think we track that, and that's now I want to see if I can track that. So thank you, Oleg.
oh, thank you.
All right. So property visits are really important. I don't live in Phoenix or Tucson where my properties are, but it's an hour flight or 5-hour drive. So I'm out there every 2 weeks looking at my properties and looking at new properties to buy. So I know some people that live really, really far from their properties. So you just got to make sure if you're not checking on it on a continual basis, have someone with boots on the ground so they can check it out. Is it clean? Are the banners up? Are things are things getting done the way you expect them to be? And a really good way to do that is do some surprise visits. I don't always tell them when I'm coming, because we have one of our property managers we had to let go because she was telling us all these things were getting done and they quite honestly weren't. And that's why you need to do spot checks as well. Don't always tell them you're coming, because you never know what you're going to find. Hopefully you set the expectations from day one on what you expect. And if they aren't being met, then obviously you have another conversation. But you shouldn't have that same conversation a third time. They should be meeting your expectations. We also do secret shopper reports. So I have an assistant, so she'll just do it online. She'll submit in a bunch of different ways. She'll do a phone call, she'll do an email, and she'll use a different name every time, and we'll see how well they perform. We have a checklist rating different things, how quickly they get back to her. Do they answer with specifics of questions that she asks? Because a lot of times they'll just give a template and not. She'll say, I want to move in at a specific time, and they might not address that. So it's really we rate them, and then we go over it with them. And quite honestly, they've never gotten a 100% score. It's definitely something that we continue to train up our team.
Gary, there's a question that has come in from Lupe.
Yeah.
So what happens is when you close a property in the middle of the month.
Yep.
So let's say July 15, the first mortgage payment wouldn't be due until the next September 1st or something. So then what do you do for the cash flow for that half month? Do you actually hold it for reserves, or do you have to also distribute the cash flow to the investors?
The cash flow is prorated. So if we took over the 16th month, we get half of that. We get all the deposits. But typically we don't pay out to our investors. That's question to investors.
Yeah, so you have the 15 days of cash flow now to you,
yeah.
But there is no mortgage payment you're doing in that month. So that month's cash flow is going to be actually more, because even though it's half month's cash flow, right? So would you hold it for reserves, or would you actually, because it's a surplus cash flow, you're going to put it in, distribute it to the investors?
Yeah, we always like to hold on the cash. And typically, since we're doing value add, we won't pay out until the 7th month, 6 months because we're lifting up the property, we're improving it, we're raising rents, because typically there's tons of loss to lease. So we typically won't pay out until the 7th month. And we love reserves. We're always going to have buffers, because you don't know when Texas freeze is going to happen or COVID is going to happen. So, or you want to pivot on your business plan. So we have tons of reserves. It's good to start off with some buffer too, because you don't know. There might be things that you uncover that you didn't find in due diligence, maybe some extra repairs, or you have too many Section 8 that it's causing problems, or you have to hire patrol and you didn't expect. A lot of these things you should have known, but there's always things that happen that you can't plan for, and that's why buffers are great. Better to have more money in the bank account sitting there waiting. You can always pay it out at some point down the road, so don't be too quick to pay out.
And do you pay quarterly, or do you pay
we pay quarterly.
Quarterly.
I've invested in some other people's deals that pay out monthly. Monthly is it can be, it's just a lot of extra work. So we just like to do it quarterly.
Quarterly, okay.
And our property management company handles that for us. So they'll do ACH or write a check. Most people.
Wait, property management company actually manages investor payments distributions for them?
Yeah, they send it. They send it out for us. So we give them, everyone's name and all their information, and we'll say, okay, well, we want to distribute 4% this month for this quarter. So
Okay.
they'll send out the payments for us.
Oh, interesting.
We don't send it out ourselves.
Okay.
Yeah.
So they
that's
do a
part
lot of calculations for you as well.
Yeah, we'll typically put a column in there for them to make it nice and easy, I mean, it's all around numbers, 50,000, 75, 100, 150, so
Okay.
it's just, it's fairly easy, and they could just send it out. So
Okay.
makes our life easier. All right. So weekly call with weekly reports with our property manager. We rarely skip a week. It might be, if it's a holiday, we might push it to, we typically do it Mondays, all of our calls. So if it's a holiday, we'll push it to Tuesday. That consistency is so key. I mean, we're selling a property now, and there's really not, everything is going well, but we still have that call, even if it's 10 minutes long, because if you're not having that call, you're not able to find out things that are going on. So it's really important, consistency, to always have that call. And with a really detailed report, you can ask the right questions. Like I said before, access to their property management software. You're managing the manager, so you want to be able to see everything. It does take a little bit to learn how to use that property management software. Then we get all the monthly reports. I mean, it's the financials are, it's probably like 200 pages for our properties. And you've got to go through it with a fine-tooth comb, because they do make mistakes. They handle a lot of properties. We've gotten things charged to our properties when it should have been charged to something else, or double billed. So you got to go through it, and it goes faster. You get the hang of it, but don't be afraid to ask questions. And if things aren't going right, like we sat down with one of our accountants the other day, because we weren't getting everything on a timely fashion. There was some questions, some things that she wanted us to do differently, and we wanted her to do differently. So we just sat down and ironed out the kinks, and hopefully moving forward, it'll be really nice. Now that we have really good expectations, we wrote a form of all the things that we went over, and so that sheet's going to hold us all accountable to what we agreed to.
Right. There's one more question that I want to ask. Is your first distribution usually in like 6 or 7 month, or first distribution start in the first quarter? Like how?
Yeah. It'll be typically we say we're going to wait 6 months while we do the lift. So cash flow is going to be low on the first year. So maybe it's 4% the first year. Second year, 6-7%. Then I'll keep growing from there. But when these cap rates are compressed right now, and they will be for the foreseeable future.
Right.
These are big lifts, so it takes time to generate that income. So we'll set the expectation with all of our investors when we send out the investment summary and our webinar, because some people raise extra money to pay it to the investors, and that's just silly. Why?
Yeah, that
why
makes sense.
Yeah, and it's actually not legal, but some people do that. So we'll set the expectation from day one and say, hey, it's going to be a few months for this cash flow while we improve the property. And typically we overperform. I'd rather under promise and over deliver. But that it gives us a nice buffer to get that cash flow up. We can always pay out earlier if we've done phenomenal, or we could pay out more, but it gives us some time. All right. All right, so like I said before, things must be measurable and traceable. If they aren't, then how do you know if they're done to your, to your expectation? Document all calls and meetings. Again, it's not to catch anyone, but it provides something to go back to, because people forget all the time, or they write it on a little piece of paper, so have it there for everyone to see, and people can go back to. Be proactive, not reactive. If you're reactive, you're already behind. If you're proactive, you're gonna solve problems before they occur, or if something happens, you're gonna be well ahead of the curve, because you're not gonna be, like I said, you're not gonna be behind the 8 ball, you're gonna be ahead of it. So these are all simple things that anyone can implement. All right, and do not relax or become complacent. If your target was 92% occupied, and you're at 92%, doesn't mean take your foot off the gas. You can always be improving. What other things can you add as far as income? Can you push the rent? Can you reduce expenses? So there's always things that are constantly improving, constantly measuring. Where that extra couple percentage points from 92 to 95% is all profit, and you multiply it or divide it by let's say a 5 cap, you've added hundreds of thousands of dollars to the value of your property. So always be improving. We do have an asset management mastery course. If anyone is interested, you can go to assetmanagementmastery.com and find out more about it. And then here's my information. If you ever want to get in touch with me, my email, I'm on LinkedIn, Instagram, my website, and our YouTube channel. We have all the podcasts on the YouTube, and our different webinars that we've had as well. All right, any questions? Oh, you're on big.
Yeah, any questions, anyone? Somebody's asking, Mohit is asking, what's the cost of the course and how long is it?
The course is you go at your own pace. It's 15 modules, I guess on average about 45 minutes. And there's a lot of the templates that we use are free, and it's there as well. So like our CapEx tracker, KPIs, all the different things are there. I believe the course is $7.99. On our website, it might be more. If you're interested and you see it for more, email me. There's a different way to get to it at the cheaper price. And then also, and if you want to go real inexpensive, then buy the book. It's not nearly as detailed, but I think it's $15.
Yeah, I would say I would definitely recommend the book because I've read it, and I've gotten some really specific tips about tools and stuff like that, where I'm actually started using them, some of them. So
Great.
I'm very happy about the book. It's very good.
Mohit asks, do all property managers use the same software? No, there's a bunch of different software out there. Our property management company actually is changing the type of software too, so we need to get used to that. But all of it can feed into if you build out KPIs. So you just have to set it up. It might cost you more money, but there's a lot of different property management software out there. So yeah, it just takes a little bit getting used to.
And you said you talked about RealPage, right? And
yeah,
I didn't understand what it exactly does. So it sucks in data from all these property management software.
Yeah. So we use our business intelligent platform. It builds out our KPI, so it interacts, it connects to the property management software, pulls all the data, and presents all the information in a very digestible format. So we can play with the KPIs in a lot of different ways, which is nice.
Okay, and it connects with most popular platforms?
Microsoft has something. There's a few others. This was reasonably priced and easy to use. That's why we chose them. But I'm not an affiliate or anything. I mean, there's a few others out there. And for
Maybe one
us, I
question
mean, it's
for you,
well
Gary.
worth it for us to be able to make better decisions. You know, we're managing, 10, $50 million properties. So to spend, $100, $200, $300 a month is a no-brainer for us.
That makes sense.
Anyone else have
Gary?
more questions?
I
Hey, Corey.
do. I was wondering if you ever incentivize your property managers off of like KPIs, and if so, how do you do that?
Yeah, it's tricky because you want to incentivize the right thing. Because sometimes if you say more leases, then they're focused on that. So NOI is a really good one because that takes everything into effect. And so we've been tweaking how we're gonna do it. But typically in the past we've gone, $200 gift certificates for hitting a certain threshold. But we're building out a much more robust incentive plan. But really the focus is NOI so that everyone is involved and there's not one thing that they can be slacking on. Everything leads into that. So if that's doing well, that's the most important thing. Then we're all benefiting from that.
Right, that makes sense. And one more question too, and you don't have to answer it if you don't want to, but if you're going into, or as a new person, or if you're going into a new market, how do you I guess start to build your relationships with the property managers? So we find that, having them go with you to or ask them to go to a property or just trying to build that, if they don't know you, it's kind of a catch-22 almost.
Yeah, but they want your business. So what I'll do is I'll ask brokers, which property management companies they recommend. And then I'll go to property management companies, which brokers do they recommend, and just to start meeting them, go to their office, go to the property management company's office, check it out, and kind of get the vibe of the place. And yeah, we had a number of them tour with us on some properties that we were putting offers in. So they'll do it, a few times for you. They're not going to do it like 15, 20 times. And we have them do pro formas, like we'll have our pro forma and we want to see what they come out with. And because you want to be working with someone that's not a yes man. You want someone that's going to be pushing back and say, you know what, the salary that you have is too low. It needs to be here. Or the rents that you're expecting are too high. You don't want someone that's just going to tell you what you want to hear. So spending time with them is really important because one coffee with them isn't going to do it. You've got to spend a little bit more time to get a good feel.
So that's super helpful. Thanks, Gary.
Can I go back to the incentives that you said?
Yeah.
So is there like a team of those people working with you from property management? Is it just one person or like 2, 3, 4 people? But are you going to give gift certificates to all the people, or shouldn't you be incentivizing the company instead of like individuals by giving them gift certificate?
Yeah. So it's really the on-site management team that we're incentivizing. So let's say it's a 128 unit property. We have a property manager, we have a leasing agent, we have 2 maintenance people. So they're all sharing in that. We really don't need to incentivize our regional manager. It's part of her job and she wants them to be incentivized. When we sell it, we also incentivize them to stay. We have, I don't know, I think we had like a couple thousand to incentivize everyone to stay till we sell it, to just keep everything flowing right. And at that point, then we'll give a nice bonus to our regional property manager, depending upon how long she was working on it and the results that we got. So, the bigger the property, the bigger the profits, the more you can incentivize. If it's a small property, then it's going to be a smaller incentive. But these people, so are working. If the 4 people are working full time, so you know, you want to give, you know, 1 month or 2 month salary, where the regional has, you know, 10 properties that they're managing. So they're not working full time on your property.
Got it. It's the on-site team that's you're really incentivizing.
Yeah,
I understand.
Yeah.
Okay.
And these bigger properties, you can afford a full time
Afford full-time.
person. So our first property was a 42 unit. And so, you know, we had a lot of turnover. They were only working, you know, 20 hours a week. So once you start moving up in the bigger properties, it actually becomes easier to manage. You get higher quality people and whatnot. And so teaming up with other people, like my first deal, there was 3 of us that teamed up to take down a $1.65 million deal. Then our second deal, we almost 10x that. We went to a $15 million deal. We added a few other partners, but it just helps to get that economies of scale.
Cool.
Yeah. Any other questions? Yeah, don't be afraid to ask anything, because we're all here to learn. So there's no bad question.
Right.
Hi,
guess,
Gary. I just wanted to say that I'm really grateful that you're holding this. For someone new to multifamily, the most intimidating part, besides landing the deal, is then running it afterwards for the time that you're holding it and being successful with it. So yeah, thank you.
You're welcome. And the real estate community is really people that share information. So on Facebook or whatnot. So if you ever have a question, you jump on I have a Facebook group, Asset Management Mastery, or there's so many real estate groups on Facebook. Feel free to ask questions. Someone's gone through it, and there's a really nice sharing of information. So that would be another point I should have put in there as well, is don't be afraid to ask anyone, because most people are willing to share, and it just helps, you know, really helps.
Thank you for that.
This was very useful, very, very specific tips. And one glad thing is I've recorded it. So, you know, you guys can listen to it again if you wanted to. I'm going to make it available through YouTube. So thank you again, Gary. It was
my pleasure.
Cool. All right. I guess, one thing that'll be useful for everyone is if you guys want to network with each other, right? I'm going to just stop recording.